Hi, welcome back. Every trader has said this at least once after a losing trade. I'll just wait, it'll come back. And sometimes it actually does. But most of the time, that small loss quietly turns into something much bigger. And it's not because the market was impossible to read. It's because you didn't want to admit you were wrong. The real problem, most traders believe they're managing risk. But what they're actually doing is protecting their ego. Because taking a loss isn't just about money. It feels like admitting a mistake. So instead of getting out, you hold on a little longer. You start justifying it. You tell yourself a better story. This is a strong company. It's just a pullback. I'll sell once it gets back to where I bought it. But that's not trading anymore. That's attachment. And there's a real difference between the two. The ego trap. The tricky part about the ego trap is that it doesn't feel like arrogance. It shows up as hesitation, as hope, as this quiet need to be right about the call you made. And that's exactly where most traders start losing control. Because the moment you stop managing the trade and start defending it, you've already made the real mistake. What smart money does differently. Here's something that separates experienced traders from everyone else. They're not trading to be right. They're trading to survive. They understand that every trade is just a probability, not a certainty. And when that probability breaks down, they get out. No hesitation, no emotional back and forth, no new story about why it might still work. Because they know that capital is finite, and protecting it is the only job that actually matters. The shift. Right vs profitable. This is the mindset shift every trader eventually has to make. Moving from, I want to be right, to, I want to be profitable, because those two things are not the same. You can be right about a trade and still lose money. And you can be completely wrong and still be a great trader. Because great traders don't win every single trade. What they do is control how much they lose when they're wrong. The hidden cost. But here's the part most people overlook. Holding a losing position doesn't just cost you money. It costs you time. Your capital is locked up in something that isn't working, while better opportunities are passing you by. And in options trading specifically, that matters even more. Because time decay is always running in the background, working against you whether the trade moves or not. So the real cost isn't just the loss you can see on screen. It's everything you couldn't do while you were waiting and hoping. Important distinction. Now, I want to be clear about something. This isn't saying you should bail the second a trade moves against you. That's not how professionals operate. The difference is this. Professionals don't exit because they're scared. They exit when the original thesis breaks. There's a real gap between a normal pullback inside a healthy trend and a setup that has genuinely fallen apart. Your job isn't to react every time price moves. Your job is to know the difference and then follow your plan. The core principle. Cutting a loss isn't failure. It's discipline. It's you choosing to stay in the game long enough to catch the trades that actually matter. Because in trading, survival is the strategy. Not perfection. Not a winning streak. Just staying in long enough for the good setups to show up. If you take one thing from this video, make it this. Your job is not to be right. Your job is to protect your capital. Because once your capital is gone, so is every opportunity that comes after it. If you're looking for more grounded, practical trading content focused on discipline, risk management, and building consistency over time, stick around. There's a lot more coming. Thank you for watching and see you in the next video.